Have you ever had an investment tank right before your eyes? That sinking feeling? It hurts,
Ouch!
doesn't it? But what if I told you in that moment could actually be your big ticket to the big leagues? That's right, sometimes the worst things can end up being the best things. Let me paint you a picture. The stock market is a beast. It's unpredictable and it's wild. It goes up, goes down, sideways, any direction it chooses to go on any particular day. One day it could be all sunshine, your portfolio is on the rise, and then the next it turns into a storm where the values just start tanking. It's easy to feel defeated when the numbers drop, but this is where the magic happens. When the market crashes, it's not just a mess, it's a gold mine for those that keep their cool. This is a chance for you to get the top tier stocks that everybody is afraid to purchase. Why, you may ask? Because quality companies don't crumble under pressure. They bounce back stronger than ever. So here's the deal. When you see a drop, take a deep breath. In through your nose, out through your mouth. And take a closer look. This isn't a setback. Look at it as an invitation to step it up. Market lows are opportunities where you can buy valuable companies at a discount. It's like going Boxing Day shopping or Black Friday shopping in the stock market. They don't really have a day per se that you can do all this stuff. And in turn, this sets you up to receive gains when the market turns around. Remember, all great investors have one thing in common. They turn turmoil into triumph. They know that the most challenging days are the ones that pave their way to success. They understand to win big, you sometimes have to play the long game through the lows. That's why the longer your time horizon for your investment to grow, you have less of a downside to it. It's like zooming out and seeing the big picture instead of looking at all the noise that's happening, say, in a day or in a week. The next time the market dips, don't let fear dictate your next move. Seize the opportunity. It's these moments and these tests that define your journey as an investor. My name is Dean, the Wealth Coach, your go-to guy for building wealth. I help people make, manage, and multiply their money so that they can buy back the freedom of their time. If you're liking the content so far, make sure to hit the subscribe button down below. I'd really appreciate it. Remember, in the game of investing, the greatest moves lead to the greatest rewards. On this week's episode of Stock Talk, we're talking about Shopify. I read an article that they said that they are creating a $1 trillion opportunity by partnering with major particular brands. So who's Shopify? Shopify is a company that helps people run their online stores. You may have seen their logos. It's a green and white logo with an S in the middle. What does Shopify do? They provide software that makes it easy to create a website where businesses can sell their products or services. I personally have a Shopify store. This is not a sponsorship for them. It's very user friendly. Anybody can set it up. The great thing that I like about Shopify as well, you can add extensions to it to enhance your website. So you could have like booking calls, bulk orders. There's many different things that you can do within the Shopify platform. They're almost like how Apple has their ecosystem of apps. Shopify relatively has the exact same type of function, but just for your actual website. How does Shopify make money? Shopify earns by charging a monthly fee for their software, along with taking a percentage on the apps that are in the Shopify store. So within the Shopify store, developers will put their apps on there and they take a cut of it. Who does Shopify supply? They supply both small businesses and large retailers, helping them sell their products online. Their competition are companies like Salesforce, Adobe, Amazon, and BigCommerce. All those are places where you could also set up an online store as well. Most popular is Amazon. You can set up an Amazon store. It's fairly simple as well. And if Shopify is not something that you're interested in, you can look up those companies to see if those are companies that you would want to invest in the future. Shopify's current price is trading around $65 per share. At one point in time, Shopify did a stock split, and before the stock split, they were trading around $1,300. So there's a lot of potential for Shopify to eventually get back to that level. When that happens, I don't know. If it can happen again, who knows? Now the $1 trillion question. It's like, who are these big retailers that Shopify is going to be partnering with? So a few of these companies that they're going to be partnering with is Mattel. So Mattel makes toys. Steve Madden makes shoes. And then Tupperware. So whenever you're having like the Thanksgiving or family dinners and then you're packing all the things, Tupperware. Those are the three partners that they're going to be working for, where they have an opportunity to be making $1 trillion. Imagine you having a business where you're making $1 trillion. That's a lot of zeros in your bank account. What makes Shopify stand out from the rest of the bunch? One thing that I found was the apps. I found that to be pretty cool for them to have their own apps within their platform. Also the integration, brand recognition, scalable platform that supports all business sizes. That wraps up this week of Stock Talk. If you're interested in learning more about stocks, unsure of how to invest in your first stock, you can click the link below and join the Wealth Builders Academy. It's $7 a month. It's cheaper than a Netflix subscription, but more valuable than a Mercedes. I can't wait to see you inside the group, so make sure you click the link down below. Top 10 reasons why someone might avoid investing in the stock market. Lack of knowledge. Many people feel like they don't have enough knowledge when it comes to investing, but it all starts with you going on the internet, Googling, or even going to the actual website to learn more about the company that you may potentially invest in. Fear of losing money. No risk, no reward. With all investment, there is a risk that you're taking. But if you do your research beforehand, you're taking a calculated risk. Perceived complexity. The stock market may seem like it's a complicated place, but it's very cut and dry. You buy, you sell. Does this company make money or not? It's simple as that. If the company is making money, this company has strong brand recognition, the market really demands their product or their service, then yes, then it makes sense to invest in it. But if a company is always in lawsuits, they're never making money quarter after quarter, then maybe that's not a company you want to invest in. If doing the research is too much for you, there's many different ways that you can also invest. You can do a mutual fund, you can buy bonds, you can buy ETFs, and you can buy index fund. If you want to learn more about ETFs, index fund, you can click the link down below to join the Wealth Builders Academy to learn more about that. Insufficient funds. But if you do want to invest and you don't have the money, you got to start setting up a plan of action. How am I going to get this money? If you're working, you got to say, I'm going to discipline myself and stop buying specific things, or I'm going to start saving money so that I can start investing. Investing is not only for wealthy people. Investing is for everybody. You can even start as a child. You get your parents to open up an account for you. They monitor it for you. The moment you turn 18, they transfer it over to you. Now you have a portfolio for yourself. Even if you're old, if you're 65, that doesn't mean that you can't invest. Choose stocks that have less risk behind it that can give you a positive return year over year. Bad past experience. As I said before, something bad could actually turn out to be something positive. But if you're always searching for negative things, negativity is just going to come to you. So try to see, when you have a bad situation, what can you make the best out of this situation? What lessons can be learned from it that next time a situation happens, you don't end up having the same results that you had previously. Lack of trust. Lack of distrust for financial institutions. I spoke to somebody the other day about the stock market. They're like, you know what? Nope, not for me. I don't trust it. Market just moves up and down. When you don't understand how things work, obviously you're going to stay away from it. So that I can understand why people don't want to invest, but you need to educate yourself. You don't know what you don't know until you go out there and do your research. Prioritizing other financial goals. Some might prioritize for a car, a house, maybe debt repayment before thinking about investing. Economic uncertainty. Worrying about the economy may go into a recession, many different things, maybe another COVID scare, World War III, who knows? But they don't want to put their money into the market because if the market tanks, then they lose everything that they had, or they lose what they put in. Overwhelmed by choices. You don't have to make it complicated for yourself. If you have 4 to 10 solid companies, that's all you need. Because your friend or you've seen on TV, they're talking about the next hottest stock, who cares? If you did your research on these 4 to 10 companies and you feel real good about these companies, you did your research, your due diligence, then don't worry about that. That's just noise. When you start picking up the noise, FOMO is going to kick in, and then that's when you start to lose money. Procrastination. Some people think that they can put off investing to a later date, and guess what? Later never comes. They say that the best time to invest was yesterday and the second best time is today. You may want to stop putting it off if you are that person that's a procrastinator. Start doing your research and buy your first stock. Maybe even buy a fraction of a stock, just to make yourself feel like, hey, I accomplished something. And that's my top 10 list of why some people don't invest in the stock market. The other day, this article caught my eye. I found it to be quite funny because I could kind of relate to this parent. And it was from the Business Insider. My 5-year-old could identify butterfly's life cycle, but not a nickel. It was a wake-up call to start teaching him about money. Nothing against school, but why are we teaching our kids about the butterfly cycle? What does that have to do with anything? As Jamaicans would say, what does that have to do with red ring tax? When I first heard that, I was like, what does that even mean? Exactly. It has nothing to do with anything. Like, why are we teaching kids about butterfly cycle? I get it if the kid is in high school, they're learning about science and the cycles of life, whatever it may be, okay. But don't you think it would be more beneficial for them to learn the value of money? As I read on in this article, the mom, she went to her son and she presented him the nickel and said, "What is this?" He said, "Money." So she rephrased the question and said, "What coin is this?" He said, "A penny." That was alarming for her. So she said, "I'm going to start teaching him about money." They went to the store and he purchased something. So she's trying to teach him about money, but I guess he wasn't getting it, which I could understand because I have this situation with my kids as well. So they went to the store, he purchased something, the toy broke, and then he said to himself, it wasn't even worth my money. And that's when he started to realize the whole concept of spending money on things that make sense and just it started to catch him. I had that same situation with my daughter. She's a bit older, but her toy broke and she went to go back to Dollarama and purchase another one. FYI, Dollarama is a publicly traded company. As I said, this was her second one because her brother broke her first one and then she was buying a second one. Before we went to the store, I asked her, "Do you really want to purchase this toy again? Because this is going to be the third one that you're purchasing and it's $5 every time that you're buying this. And you dropped it, it broke. Your brother had it, it broke. Maybe it's not something that you want to think." And then she thought about it and said, "You know what, you're right. I'll get something else." Mind you, I was trying to lure her away from purchasing something altogether, but it didn't work. However, she didn't purchase that same toy again. I did give her an idea. I was like, "Why don't you make like a skin for it and then sell that?" And then she gave me this look. The moment that they understand the concept of things or money or can speak, it's introduce these things to them. They're only going to get older and they need to learn about these things. You're around them around the clock. So if you're at the grocery store, tell them what you're paying for. Even if you're shopping, be like, "Hey, I'm buying this." Even do price comparison. Be like, "I'm buying this because of this," or "I'm not buying that because of that." Having those conversations with your kids really starts to get their mind thinking. So what I'm currently reading, I'm still reading The $1,000,000 Weekend. I'm probably like halfway through the book. It's a really good read, and if you are somebody that is looking to start a business, this is a great book to start with. In my opinion, it's a $30 investment that could save you tons of money. It allows you to figure out if you actually have a business idea or not. He also helps you with becoming confident in selling, because if you're not selling, you don't have a business. If your mouth is not open, your store is closed. One of the challenges that he gives you in the book, and I challenge you to do this, is the next time you go to a store, any store, it doesn't even matter if it's Starbucks, Tim Hortons, McDonald's, Pizza, whatever it is, ask for a 10% discount. Go to the cashier. Once you're checking out and they'll tell you price, be like, "Oh, can I get a 10% discount?" I did that the other day and the person looked at me and they're like, "Oh, we don't normally do that." But they're like, "But I could do it for you this time." I was like, "Oh, great, thanks." So now I kind of adopted that. Every time I'm making a purchase, I ask for 10% off. You'd be surprised the amount of people that will actually say yes. But it's also allowing you to get uncomfortable in those situations, because now when you're asking for money, you won't feel uncomfortable asking for the sale. The more you can ask people for the sale, the better your business will be. Now with the concept of creating your business, you want to make sure that there's a market demand for it. Let's just use skin on your phone. You want to put like a phone protector. And the easiest way for you to do that is going into Google Trends or Facebook ads and typing in phone case protector, whatever it may be, using those keywords. And based on those keywords, it will allow you to know if there's a market or not. Once that you see that there's a market for the product that you're trying to sell, now you say, "How much will my potential customers be willing to pay?" You figure that out. Let's say it's $5 and there's a million people that are looking for phone cases. That's like a $5 million industry. So great, you have something that's worth $1 million that you can eventually probably even make $1 million from. You take that information, now you say, "Let me go out there and test it." Take 48 hours and ask 3 people to purchase your product. If you get 3 people to purchase your product within 48 hours, then you have something that could work in the market. That's when you're going to start refining it after. So I'm going to challenge you. Figure out something that can make $1 million. Ask 3 people. If 3 people say no after, or if you can't get 3 people after 48 hours, then that's a business that you scrap and you move on to the next. This will save you time and money because 1, you're not creating the product. So you're not putting any time into thinking about it. And 2, you didn't put no money into creating it, into ads, whatever it may be. So then that saves you money. If it doesn't work, you move on to the next. Now imagine if you do that every weekend until you find a winning product, you're golden. You have 52 tries each year. I'm pretty sure within 52 weeks, you come up with one idea that's going to be your $1 million business. Some questions that I got this week involving around stocks. And the first question that I got was, where do I go to buy stocks? Previously, back in the days, like way before my time, the way you bought stocks was through a stockbroker. You would call them up and say, hey, I want to purchase X amount of shares. They'll go on the trading floor and then they'll try to get you those shares. Luckily for us, I'm so grateful that we have technology where you can just go on your computer, your laptop, your phone, and you can purchase it directly yourself. So you don't have to go through that whole process of calling somebody to purchase the shares for you. When you use your phone or go online to do that, that's what they call a brokerage account. Having a brokerage account, you can go through your bank. So for Canadians, they can go to any of their major banks, many different platforms. So depending on where you live, you can use Robinhood, you can use TD Ameritrade, Interactive Brokers, Questrade, Wealthsimple. There's quite a few platforms that you can choose from to purchase your stocks. The next question that I got is, how do I find if the company pays dividends? Very simple. If you go into Google and type in the company's name, sometimes like even the ticker symbol or a company publicly traded, it will tell you right there on Google. It will say dividend yield, and that will allow you to know if they pay a dividend or not. You could also go to yahoo.finance and also type in the company, and it'll let you know on the bottom if they pay a dividend or not. The next way that you can figure out if they pay a dividend, you go to the actual company website, investor relations, and it'll let you know if they pay a dividend or not. For example, does Apple pay dividends? And a bunch of things will pop up in Google that will let you know if they pay dividends or not. Do you think it's best to purchase a couple of stocks from the same company for your first purchase, or should I buy from different companies? First, come up with a game plan. What's your purpose of investing? Are you investing for yourself? Are you investing for 10, 20 years, your kids? What is your purpose? What's your why? Figuring out your why will lead you down the path that you need to take. From there, you figure out the companies that you're interested in. Once you figure out the companies that you're interested in, you want to do your due diligence. And what I mean by is doing your research. Once you figure out if that company is a quality company to purchase, then you can make a decision on whether to purchase one company or multiple shares in a company. While scrolling on TikTok the other day, I came across something for how to have success trading in any market in 6 steps. So the steps that I wrote down for this were: have a plan on how much money you want to make in a day. When you reach your goal, stop trading. You can't get back your time. When you hit your goal, go and enjoy life. Trading doesn't have to be something where you're just consistently at the computer, just keep going and going. When you set a target for yourself, think of it like playing soccer. Their whole purpose is to score the goal in the net. Once you score that goal, the game's done. On to the next. Go enjoy life, go have fun. Have a stop order on every trade and never change it midway through it. Do you notice I said stop order versus stop loss? We're trying to eliminate negativity and just have positivity. So we don't want to use those negative words. We just want to move them as far away as possible. Immediately put a stop order above your entry when you're in profit, even if it's $1. Think of it like baseball. It's a base hit. So instead of striking out, you got to first base. If first base means that you made $10, be glad that you made $10. If you're able to hit your limit, to me that's a home run, because you went around the bases, you scored a point. Close the account, move on, go enjoy life. Another strategy that you can do, as you're in profit, each time it moves up, say $1.50, you can move your stop order as the market goes up. But you don't want to do it in the reverse. As it goes down, you keep moving your stop. You don't want to do that, because then you're just going to end up blowing your account. You can easily do that by having a trailing limit order. So that just takes all the guesswork out of it. As the stock moves up, your limit order moves up with it. So if it comes back down, you made some money. Don't turn a winning day into a losing day. That has happened to me many times before, and trust me, it's not a good feeling. If you have 3 losing trades in a day, log off your machine. Once you pass 3 and you keep going, your emotions start to kick in, and now you're revenge trading. You're trying to make back what you lost. And when you try to make back what you lost, you actually have to make more money just to break even. So you don't want to get into a revenge trading. You can come back from a bad trading day or a bad trading week, but you can't come back from being up 500 and then down $8,000. So once you're done, turn the machine off, go enjoy life. And those are the 6 steps on how you can become successful in trading. The quote of the day: do one thing every day that scares you. That encourages you to step out of your comfort zone. This means taking action. It could be something big, it could be something small. But as long as you're doing something that's out of the ordinary. You want to do this consistently, not just once in a while, because consistency breeds success. If you're always stepping out of your comfort zone, you're only going towards growth. But if you're doing something day in and day out that's the same thing, that just becomes boring and nothing's gonna happen for you. So go out there and do things that scare you. It should make you feel nervous and uncomfortable. It's about facing your fears and pushing boundaries. This will help you with your personal growth and embrace your challenges and overcome fears. My name is Dean the Wealth Coach. I hope you found value in this video. Make sure to hit the subscribe button and I'll see you on the next episode.